Shares have shrugged off the worries of last month's Brexit vote, and a News Corporation Australia analysis found that more than half of the nation's 200 biggest stocks have jumped at least 20% since February. One-third of these shares climbed more than 30%, including Erim plant maker Cochlear, up 44%, Origin Energy, 47%, pizza company Domino's, 49%, and Thype Offshoot South, 62%. However, traditional favorites such as Telstra, Woolworths and the Commonwealth Bank have climbed just 5% from February's lows, and these are where investors put the majority of their money. Share specialists say while the popular blue chips generally pay healthy dividends, that income will be eaten away by a share price that is falling or growing slower than the overall market. They say it is wise to diversify, holding a mixture of 8 to 15 stocks of different sizes and sectors. The problem with individual investors is they can't let go of anything, said Wealth for Life financial planning principal Rex Whitford. This was often because people did not want to admit to themselves that they had made a mistake buying a certain stock, he said. Mr. Whitford said the share market's rapid recovery from the Brexit turmoil showed that it was wise to ignore short-term fluctuations in share prices. He said the global financial outlook was improving. I feel that a lot of the X factors have been taken off the table and that has created greater confidence. Brexit was nowhere near as bad as what people thought it was going to be. CXC Markets chief market analyst Rick Spooner said shares' strong run reflected their recovery from heavy falls earlier in the year. He said the big banks, Telstra and supermarket giants were battling extra uncertainty and rising competition, while the overall market's outlook was flat. There is downside risk, but I am not predicting things are going to go this way, he said. There are times when the big stocks are the place to be, but a diversified portfolio is not a bad way to go for private investors, a mix of bigger and smaller stocks. Mr. Spooner said investors today should buy on the dips if they come along, rather than weigh in now that we have had a big run. Altera Asset Management market analyst Tristan Cahnel said the market's 8% surge during July could lead to some sell-offs soon, and there was a risk of dividend cuts and downgrades to profit forecasts in next month's reporting season. He said despite their flat performance, many people would stick with the blue chips. With the aging population, there will always be a certain section relying on the income from Telstra and the banks. Some will hold these stocks for 30 years. Mr. Cahnel said investors should be alert. There's a lot of uncertainty out there. News.com.au's privacy policy includes important information about our collection, use and disclosure of your personal information, including to provide you with targeted content and advertising based on your online activities. It explains that if you do not provide us with information we have requested from you, we may not be able to provide you with the goods and services you require. It also explains how you can access or seek correction of your personal information, how you can complain about a breach of the Australian privacy principles, and how we will deal with a complaint of that nature.